So there's quite a bit of talk about a recession. Largely as the world goes, so do we, in many respects. And there's a couple of things to note before we hear Donald Trump pretend that it's not happening. One of the things that people are pointing to is this yield in the or inverse yield inverse in the yield curve, which basically means, I'm going to do broad strokes here because frankly I only have a rudimentary understanding of this. Long-term interest rates are rising above, and this only happened very briefly, I guess, for like an hour or two the other day. But every other time it's happened, 50 times, it has been predictive of a recession. Long-term interest rates rose above short-term interest rates, which basically means that people have concerns about the economy down the road, that that's basically what it is. I mean, it has to do with treasury bills and where investors think that safe places to go are and what yields will be, et cetera, et cetera. But that's the long and short of it. It happened very briefly, so who knows? The big concern, though, however, is that the Fed does not have much ability to lower interest rates more than they have, which is a tool that you need to fight a recession. The other tool that you could use would be government spending, which, of course, there's going to be massive reluctance to do it, particularly if a Democrat comes into office in 2021. They're going to use the excuse of this massive deficit and debt to say that cuts have to be taking place. And you could raise taxes on the very wealthy, pour that money back into the economy in a myriad of different ways, but unlikely that, the politics would have to be pretty different than they've been in the past 30 years. There's a report out today, CNBC, writes about economists who have examined the impact of the 2017 Tax Cuts and Job Act say it isn't helping in any of the ways advertised. Overall growth, business investment, or worker pay, all flatlined. Tax cuts have not generated the promised growth of 3% or more. There was an uptick. Then some of that stuff was revised down. We've already seen the bulk of it. A Congressional Research Service analysis. I want you to remember this because this is exactly what happened in Kansas. Now, in Kansas, it destroyed them because they don't have the ability to print money and borrow money. They have to balance their budget every year. But the argument is if we cut taxes, revenue will actually go up from taxes because there'll be so much more business activity that more money will come in. Complete disaster in Kansas. So much so that a fully Republican legislature voted to increase taxes 3 years later because it was so devastating, 4 years later. A Congressional Research Service analysis concluded that the law has produced, are you ready for this? Because when I say to you, I'm going to cut taxes and we're going to make more in revenue, that means that tax revenue after I cut the rate of taxes is actually going to come in at like 101% or 105% or 110% of what we cut in terms of taxes. The Research Service, Congressional Research Analysis conclude the law has produced no more than 5% of the growth needed to offset the tax cut losses. So they missed it by that much. Are both my hands out of frame? Because that's the only way to communicate this. Here is Donald Trump. When asked about the economy, he thinks it's like a tennis match with China for some reason.
I don't see a recession. I mean, the world is in a recession right now. And although that's too big a statement, but if you look at China, China's doing very, very poorly. They've had, I just saw a report, they've had the worst year they've had in 27 years because of what I've done. And they want to come to the negotiating table. You know, they're having companies lose, I mean, they're leaving. The companies are leaving, and they're laying off millions of people because they don't want to pay 25%. And that's why they want to come to the table. I don't think there's another reason other than President Xi, I'm sure, likes me very much. But they're losing millions and millions of jobs in China. And we're not paying for the tariffs. China is paying for the tariffs for the 100th time. And I understand tariffs very well. Other countries, it may be that if I do things with other countries, but in the case of China, China is eating the tariffs. At least so far.
Might be a pivot time later today.
Right.
When I say
Right.
so far, because I don't actually want a recession.
Right. Slight lack of understanding of the global implications.
We
of
have
our
an incredibly interdependent economy with China, which is why if they
Good.
do bad, we do bad. We do
Everybody
great,
said
excuse me.
when I wanted to start trading with Mars that it was pie in the sky, that now we have a backup. Don't need China. Have Mars.
It's a great signal for our economy that China is shedding jobs and having extreme instability.
So
That's exactly what you want
Now
with
look,
a prime trade partner.
people are a little skeptical about Donald Trump and his grasp on these things. So who better to send out to assure us all that there's no recession coming?
Steady hand.
A steady hand than the guy who was famous for being the biggest booster of the stock market and the economy about 9 months before it had its biggest crash since the Great Depression. I will say this. This must have been pre-taped because this aired at 10 a.m. And later in the program, we're going to play a performance of his at 10:30 a.m. And there's simply, unless they have one of those beer funnels in this studio, there's no way he could have had this type of evolution, let's say.
Which is not to say that this is going to be sober.
Right, which is... I'm just saying that it takes usually a couple hours to get that. But I don't know. Here he is.
Chuck, one last point.
Okay.
Low interest rates, which is across the spectrum, is a very good thing for housing, for construction, for automobile sales. So low interest rates, no inflation, virtually no inflation, Chuck Todd. So I actually think it's a pretty good story. And again, let me echo my theme. Let's not be afraid of some optimism.
Okay, you say that, but you know, you actually said that in 2007, right before the second worst downturn in American history. This is what you wrote. There's no recession coming. This is in December of 2007. The pessimistas were wrong. It's not going to happen. The Bush boom is alive and well. It's finishing up its 6th consecutive year with more to come. The more to come was a massive downturn. So I admire your optimism, but the data is pointing in another direction.
Well, I plead guilty to that late 2007 forecast. I plead guilty. By the way, every other forecaster, CBO,
You weren't alone. You weren't
OMB,
alone. That's
Blue
right.
Chip,
You weren't alone.
They were all there. However, just a wee bit of Kudlow defense now. By February and March,
I said we.
on CNBC in those days, I did go to the recession call. So I will plead that I did see it. I don't know that anybody saw that kind of crash. But look, this is not them.
Pause. I just want to make it clear. It's not a question. First of all, there was a lot of people who saw a crash. A lot of people actually saw a major crash. I know this because I was talking about it. And if I was talking about it with only really an ability to read other people in terms of the economy, then clearly there were people talking about it. But let's not make a mistake here. He didn't say there's a chance for a slight downturn. He said we're in booming. And this guy was out there, optimism every day on TV. Every day.
That's the Bush boom. Great time to buy a derivative. Chuck Todd.
Here's the irony. That was when he was more sober. despite the fact his analysis was less sober. As it were, I'm speaking metaphorically. Continue.
Look, this is not then. This is not then. Our banks are well capitalized. Our financial system's in very good shape. And I must say, as the president is transforming and rebuilding this economy, he deserves enormous credit. A new policy of lower taxes and regulation and energy opening and trade reform. You know, we didn't quite get to 3%, but look, Chuck, the first 2 years of the Obama administration, we were just a hair below 3%.
Okay.
We're moving in the same direction.
Did you just call it the Obama administration? Did he just call it the Obama administration?
I think that's what he said.
We didn't quite get to 3%, but look, Chuck, the first 2 years of the Obama administration, we were just a hair below 3%.
Okay.
We're moving in the same direction. And let's be honest
Wait, what
here.
is he talking about?
We've
In the
faced
first 2 years
growth under Obama.
I'm
They're
talking
saying-
in the first 2 years of the Obama
I'm comparing
administration,
growth.
we were in a deep recession.
Yeah.
Oh, we were in a recession.
So he
Sam
must be talking
Seder?
about the Trump administration.
Oh, you must be Nostradamus. Ha ha ha.
Well,
Hey.
look, bottom line, we don't need to see any more of this because the really sad stuff will happen.
Lushad.
But the real problem, I think he's right to a certain extent that we don't have the same exposure in terms of the financial system, although who knows, but more than likely not. The problem is there is no slack. There is no room. And in the event that there is a downturn, I mean, we can spend, but you know, if a Democrat is elected president, all of these guys who don't care about the $1 trillion deficit, debt right now, they're going to be freaking out about this stuff.
I'm going to downturn this shot into my face, Chuck Todd.